Mega merger today is Raytheon and United Technologies announced that they are coming together in an all-stock deal to create an aerospace and defense company second only to Boeing in size, with nearly $200 billion in combined market cap, just under $75 billion in annual sales. Both stocks have soared through the first half of 2019, up about 20% on the year, far outpacing the broader markets. And with stocks in rally mode after a rough May, the Chartmaster says defense might be your best offense. Carter Worth's over at the Plaza to break it all down. Hey, Carter.
Hi there. Well, long term, of course, aerospace defense contractors have been just great winners. And I thought I would start with that to really reiterate that point. So the beginning of sector data for the S&P goes back to the fall of 1989. And just consider that three-line chart. I mean, the S&P, and we know the NASDAQ with its growth names, great software, great innovators, technology, and aerospace and defense really considerably better than that. So it's getting science, if you will, and technology a different way. Great performers, and that probably will always be the case. In any event, let's zero in on the here and now. This is a 3-4 year chart. We have a lot of tension, right? You can see the setup here. We've got a series of slight lower highs and higher lows, and we've worked right into, and we touched today, the apex of that setup. And presumptively, the resolution is up, not down. Let's zero in on it more immediately. So now here it is again over the past 1 year. Now, one could call it a lot of things, but it isn't random. It's the purpose of charts, that computers look at levels, chartists look at levels, even fundamental analysts look at levels, how it responds precisely and repeatedly to lines on a page. That tension, more often than not, is resolved up and out. So I want to be long in general, independent of the news today. Now, I want to show you a different. Look at this one. This is already broken out. That last one was the S&P 500 aerospace sub-industry group, dominated by Boeing and UTX and Raytheon and Lockheed and Northrop Grumman. This is a good ETF. It's the XAR. It's, instead of 10, 12 names, it's 35 names. And the weighting isn't so skewed to the big heavies. And notice this has already broken out. So there's so many ways you can draw it. You could say, of course, this is the head and shoulders bottom. It has achieved that. This is the neckline of sorts, but it is already, as opposed to the larger names, breaking out, and it's the vehicle I would use. Now, also, just putting this in context, here it is, right? Which we know is that the big names haven't made to the high. This has broken out. I think this is where you want to be. It's also an ETF that is available. But finally, there's this. This is that XAR. And here we know, right, it's just back to its high, but look at its relative performance, meaning the choices you have within industrials. So making sharp new highs relative to Ingersoll Rand or Eaton or Emerson or Boeing, and pick your name. Great space.
Carter, why don't you come on over here to the desk? Lizzie will bring the chair in since Gino's off today.
Sir?
So, of individual defense stock names, which ones look the best?
Well, I mean, at this point, I think Northrop's okay. I mean, obviously, the two that have kind of in play, let's hold those aside. The real issue is, does Boeing sort of ever get on its feet? No time soon, right? So Boeing is sort of, it doesn't look like, frankly, there's a lot of downside, but it just feels to me as though it's been reduced or brought down to a level where it belongs. But Carter, I would say Northrop is.
Can we talk about Boeing for 1 second? If you took out that early 2019 gap above $400, you have a stock that's $353. Is this stock where it should be? We know that earnings estimates have gotten slashed because of the uncertainty regarding the MAX here. I mean, take that news out, assuming the second half of the year you get a resolution. Is this a stock that you want to buy if you think the news?
Really.
Not really?
I mean, I think its peak to trough drawdown was about 25%. I think it's been re-rated by the market to where it belongs. The earnings are in question. All those things that we know are in the headlines. That being said, it is in a position of being one of two players in the whole world. There's never going to be a new, for instance, company. We're not going to have the Dan and Carter airline that we build. No one's going to ride it, right? So the point is, they've got their spot, and they're going to hold on to it.
First of all, I would ride on that.
You would ride on that?
I would absolutely.
I'm
not sure I would.
If Dan and I built it in the garage,
First passenger, right here. Sign me up. Nope. Can I pay in Bitcoin? I got a quick question, though, about how these traded today. They traded horribly today, right?
Right, so they flared up and closed on the low.
Closed on the low,
and
right?
Closed right at that line.
Right. So am I better off waiting for it to hit the bottom of that trend line or that triangle that you were talking about to buy it on a risk reward, or
Sure, that's fair. I mean, I think what's important is that it's the big names that dominate, and the smaller names, there are a lot of mid-cap names that are just on their own that are doing very well. But if and as we're talking about that XAR, one could wait for a little pivot back to the top from which it poked its head above.
So, Carter, on this, you took those names aside that are involved, though, the marquee names, the headline names. But when you look at a General Dynamics, that has trailed the market. So that's the one where if the whole thing gets pulled up, does a rising tide?
Well, so there's two ways to think of that, right? They're not quite a commodity, right? That's not like, Coke or Pepsi to some extent or a chemical. There is probably something about the General Dynamics business, and I think a lot of it maybe has to do with private jets, or there's that element to it. Is that what it is? Which is holding back. It's not necessarily a pure defense. Right.
Would you say that this, not just because of this happening now, but do you think that this is an industry where we'll see more consolidation? Do you see more of maybe not the biggies, but some looking down and getting some of those mid-cap type
right?
names?
Oshkosh, they're ones that have, but there has to be a certain number of players, and the government supports, but it gives a contract here, gives a contract. Here's the interesting thing. I remember when I was quite young, a portfolio manager said to me, I don't play technology because it's risky. Think about what happened to IBM, or think about Intel. I play my technology through defense contractors. You talk about scientists, like at Skunk Works. He said, this is where you get great technology exposure without having the vagaries of, wow, I'm the next, Twitter or what have you. Interesting.
Broader question, Carter, since we have you. How do the markets look right now, 2% away from all-time highs?
I mean, we've got a lot of superlatives, right? We had a sell-off that was fairly unprecedented, right? You're talking about 6 weeks down in the Dow. Then you have one of the biggest rallies of the year on a weekly basis, an incredible thing. We're still just churning, right? We've been doing this for 15 months with volatility. If over the past 15, 16 months, cash beating stocks, corporates beating stocks, treasury, what is the proposition that somehow stocks are going to come back to life because of trade, because of tariffs that didn't exist, that do, now they don't? I mean, it's all, the cycle feels very peakish.
All right. Carter, thank you. Carter Braxton Worth at Cornerstone Macro. Where do you go in defense?
Yeah, well, I would play the underperformer. I would go to General Dynamics because if you look at it, it's a well-diverse play. You have marine systems, aerospace, infotech. They're all split up, and they're almost the same amount of billions in revenue. So 8 down to 4 billion in revenue. So if the president says that he doesn't want any monopolies, you go for the most diversified play that no one can say, okay, I own one segment of the defense sector, and since it's been underperformer, I think if this one rallies, then that means the overall space is rallying as well.
Yeah, and I would just say that listening to him, the president, speak about this deal this morning briefly on the show, I think that there's no certainty that this is going to happen. It's going to take an awful long time. Carter's just saying, take out two of the biggest names in the space out of. You may not get the performance in this group from here on out. I'm just saying, and if this deal looks like it's not going to happen, UTX and Raytheon are going lower, and you just mentioned the underperformance of General Dynamics. I mean, the group doesn't feel that great to me fundamentally if this deal doesn't get done.
Definitely.
Well, but the only thing is the president did say this morning that he wants to cut the budget except for defense. So if there's any place that you know that money's going to be coming into, it is likely in defense. So for me, I would play, let's call them the mid or smaller caps of the area, right? Like Triple L or something like Hexel, HXL. Those are part of the XAR ETF that Carter talked about. But I'd buy them on a pullback, right? I'd buy them back on a pullback back to a trend line.
There's a name that I'd never known even of before until I saw the options get really active a couple of weeks ago, Kratos. Now, this thing has been absolutely on fire. If you take a look at that chart, KR8, KRAS, I believe, KROS. This is a monster. It has been moving to the upside in the defense world. And then if you want to stay big, Lockheed Martin, that was a pitch stock for me a long time ago, Mel. I still believe in that company. I think they're doing everything right now.